Hi everyone, today let's talk about the weak manufacturing data that came in today. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the chief economist here for Nationwide Mutual said this weak manufacturing data that came in today does pave the way for potentially 2 cuts. They had a 4-minute video here, they didn't publish an article, but basically she said the weak manufacturing data, the relative deflation for goods, and then somewhat sticky inflation on services should provide a potential for at least 1 cut, potentially 2. She was actually pushing that 2-cut narrative. I think that's a little aggressive. And I also think September is a little bit early. I think we'll probably get it right at the end of the year at this point. September is possible, November probably not because of the election. But there are people talking still about 2 potential cuts, even with what the Fed said at their most recent meeting. Moving over to fear and greed, we actually saw a really strong step here to 48 from a 43 back into neutral. You can see that rally up here that we've seen over the past couple of days. And then looking at momentum, still extreme greed, really no change on these first 3 indicators. Put call ratio still hovering extremely low at 0.69. Volatility didn't really see a bounce here today. And then safe haven demand rocketing higher towards that 4% range. Probably saw a dip on rates with that economic data. We'll see that later. And then no change here to junk bond demand. Looking at seasonality, first couple of days here are supposed to be relatively flat to slightly bullish. Seasonality says we could see a dip towards that 0.5 to 1% range. And that is what we did see on the Russell. The Russell is the black dotted line. NASDAQ did dip negative, ended up finishing positive. So we'll see how this continues to play. Sideways choppy really up until the 18th. A regular year would be more bullish, but this is an election year. So sideways choppy to slightly bearish here towards the end of the month. And then looking at that calendar, remember the first trading day of July up 29 of the last 35. So that was expected to be bullish, and that is what we got. July is the beginning of the worst 4 months for the NASDAQ. So just keep that in the back of your mind. Seasonally, it should be bearish towards the end of the year, but right now we are seeing bullishness, and you can see all of these green bull heads here up until that 18th time period. Again, that is based on the non-election year. And then looking at that data, you can see global US manufacturing coming in lower than expectations by 0.1. Still just barely positive. Manufacturing employment below the 50 mark, that's bearish. Manufacturing PMI, manufacturing prices, all coming in worse than expectations by quite a bit here. You can see 52.1 versus 55.8, not great there. That's what you want to see from prices continuing to come down there. And then PMI, well below that 50 mark, below the previous read as well, not good from an economic perspective. And then for Tuesday, remember JOLTS job openings at 10 o'clock. That's the big one. We also have CPI for the Eurozone, and then Fed Powell speaking at 9:30. So see how that plays. And then remember, Wednesday is your short trading day. Closes at 1300. We still have a little bit of data, ADP non-farms to give a little bit of a precursor to the unemployment data. And then initial jobless claims coming in on a Wednesday because we do have that Thursday off for 4th of July, as well as some more economic data to see if that continues in line with the numbers that we saw here today. Moving over to Max Pain, you can see stock price there, 545, Max Pain 543, so we're still hovering in that same range. A little bit bigger put walls and call walls now today, 540, your low, about 1% lower, 553, about 1.5% higher. Some smaller ones at 550 and 543, probably in this range, but most likely within that 540 to 553 area. Options went up a little bit, 553, put call ratio quite a bit lower than we've been seeing at 1.94. Top of the puts, if we get a max finish here, that would be 551, 552. So we'll see how that plays. Again, about a 1% move is the expectation. Moving over to the markets, looking at the S&Ps here on the hourly and the daily, you can see a couple of wicks through these lows, caught some bounces. 544 continues to be a zone of support. You can see we overthrew it quite a lot. Got back above it, retested it on that last candle, continued to rally. Stayed positive on the day. It's going down a little bit after hours, but as long as 544 is intact, then you should be a little bit bullish potentially into tomorrow's session. So we're still seeing that. Still bearish momentum, still below the trend line, but holding that support. So sideways choppy markets, at least until this structure changes, which it has not done on the short time frames quite yet. Moving over to that Tasty charts here on the 4-hour, you can see it is that 55 EMA that's holding at 544. So we're still seeing that 4-hour chart. First ATR continuing to hold support right in the middle of the range. No clear direction, slightly bearish momentum, very little volume, which is normal to see on a holiday week. And right now, if this structure holds, I would expect another retest of that ATR trailing stop at 548, which is the same level that we tested here on the 28th. Moving over to the NASDAQ on the hourly and the daily, you can see same thesis, big wick low, tested my level, 477.69. Got a stop out, got back above it, pushed higher, stayed bullish on the day. 0.59 0.9 on the day, not bad. Hitting that trend resistance, so that could be a factor for tomorrow. Momentum bearish, RSI still bearish on the daily time frame. Still consolidation, didn't engulf the previous candle, so still viewing this Friday as that kind of topping pattern. You can see a high, big wick to that same level, big rejection. So still viewing this as a bearish pattern overall, but the structure has not broken down, and that 21 EMA is still sitting as support at 472.35. And again, that's assuming that the 477.69 level breaks, which it has not done yet. Moving over to the Tasty charts, you can see here on the 28th, we did touch that upper ATR band, pulled back to the 55 EMA, just like the SPY, tested the lower ATR support, which this is bullish condition, so that's 477.54. Touched that here on the 7 a.m. candle. 11 o'clock candle was quite bullish. You can see we got up to that 482 area, and then that after hours candle, you can see momentum stepping to bearish, which is interesting, but price action looking a little bit more bullish, so still consolidation, sideways action with no clear direction. You can also see that the ATRs are trending towards that midline, so again, that is consolidation with no clear direction. Moving over to the Russell and the Dow, you can see the Russell was down 0.84, not great. Still holding the trend, which is good, and it did touch that trend, overthrew it a little bit, closed above it. We were bouncing a little bit after hours, but now we're completely flat after hours. Momentum did see a step down. RSI needs to bounce here if it's going to do it. We got the break. Looking for a retest of that SMA and then start to see this SMA swing higher. Strong volume on the Friday candle, which was positive. Not a ton of volume here, so expecting this to hold and then start to push up again. See how it plays tomorrow. But today was not super great for that. And then you can see the Dow 0.08 to the upside. It's given that back after hours. Momentum continues to fade. RSI still flat, still finding resistance at 392.44. So multiple wicks to this level, still cannot seem to break higher. And it is starting to lose momentum and look a little bit more bullish in my opinion. Moving over to stocks that moved today, we have Carnival and CHWY. You can see both of these were down quite a lot, 5.4% for Carnival and 6.61% for CHWY. Carnival had been on a massive run. We talked about this big move higher, overthrew this trend line here. Now we're back into the middle of the range. I would wait for a little bit of a bottoming, but I do think that this is going to go higher over time. Cruise ships have been on a run, and Carnival is no exception, but momentum in the short term seems to be fading a little bit. You can see that step down here on the MACD. RSI right at the SMA needs to bounce there if it's going to do it. You can see that just about 0.88 there above the SMA. Want to see that hold. And then looking at CHWY, there was news about Roaring Kitty taking a position in CHWY stock, and then it gave a lot of money back here. So it gapped higher and fell all the way to the trend line. Needs to hold this if it's going to hold as support. Again, you can see massive volume here on CHWY. Huge spikes over the past couple weeks. Big update on 29 May. Continued to rally. Still finding resistance around that 30.66 area, but I still like both of these over the medium term, but this structure here on both of them really needs to hold so that we can start to see a push up to those next levels. Moving over to Apple and Microsoft, what a day for both of these, 2.91 and 2.19% respectively, both swinging towards bullish momentum. RSI is still struggling with those SMAs because they are so extended, but look at these pushes. Apple getting back above the trend line here, pushing back towards its all-time highs. Seems like it's going to get there up around that 218 to 19 area, and then Microsoft still heading towards that trend line at 461.60. Huge positive day on both of these and a potential resumption based on that big swing that we saw. Moving over to Tesla and NVIDIA, Tesla was hugely positive, over 6%, broke all the EMAs and SMAs on the daily chart, headed towards 214. Once 203.80 broke, headed towards 214 makes sense. Cut right through that 200 SMA, so momentum bullish, RSI is overbought now. It's been a monster run over the past couple of weeks, probably going to continue here in my opinion, but need to see 214 break before we start to look for that 232 area. And then NVIDIA caught a slightly positive day after trying to break down and couldn't do it. Still in this consolidation, still continuing to push towards that 125.17 area, still holding that zone. Momentum and RSI are both bearish, so it still looks like this is going to roll over, but of course there are still buyers on this NVIDIA train. Moving over to Meta and Amazon, both of these managed to stay positive. Meta 0.09, still at this trend line. Let's go ahead and extend that out. Pretty much right where we have been on this consolidating, on this slow grind higher. Big wick down to the highly traded zone, ended up managing to stay positive. Amazon looks a lot better here, 2% higher, again touching that trend line that we couldn't get above on this previous move up. So we'll see what happens here. If it breaks higher and starts to push, then that's obviously a bullish trade. If it rejects from here, that's going to be a resistance for a potential short for a little bit of mean reversion, and then we'll see a little bit then I would expect some buyers to come in and then push this back up to the trend. So we'll see how it plays one way or the other. It still looks bullish over time on Amazon. Moving over to staples and discretionary. Staples taking a massive fall, 0.71, headed towards that 75.40 level. We continue to watch this be bearish. Still think it's going to get there, continuing with low, lower low now. So definitely breaking down more. 144 EMA sitting there at 74.61. So 2 levels to watch there. And then discretionaries, inside candle after the down day on Friday. Held the 9 EMA, slightly positive on the day, 0.34. Again, discretionary is not going higher with Tesla and Amazon continuing to look bullish. This is a little bit concerning. So overall, still a bull trend, but a very slow grinding one. Moving over to transports and oil and gas. Transports down 0.92, giving back a lot of what they made on the Friday session and below my level 64.89. If we can get back above that, that would be bullish. But as long as we're below it, that's a little bit bearish. So critical zone there. 64.89, want to see that hold and push to the 66.63 level. And then looking at oil and gas, slightly positive 0.27, still right at the level 145.92. Want to see that hold, want to see a break of this trend, and then start to push that 144 EMA up at 149.85. Momentum bullish, RSI still technically bullish, but we need to hold above VWAP and that 21 EMA right in that 145.96 level. Moving over to oil and gold here, we got oil 2.26%. What a big move. That is a huge move for oil on a single day. Very positive, momentum bullish, RSI bullish, volume bullish. Headed towards $86. We've been talking about it for a while. Hesitated slightly at this previous level, makes sense. You can see these wick lows back from mid-April. Tested that level a few times and now clear breakout headed towards 86. Looks very good there. And then gold here continuing to hold that critical level at 214.65. Positive on the day, 0.26. Momentum slightly bullish, not really. But this does seem like it's starting to catch some wicks at higher levels. Maybe we're starting to see a little bit of a swing there. See how it plays. Got the 55 EMA at 216.62 as potential resistance. But this has been a long-term pullback in time. The lows have been pretty shallow, if any. And now it seems like we're going to start to swing back up towards that 225 area, in my opinion. Moving over to RIOT and Marathon, you can see RIOT caught a big update, 8.86% after this consolidation. We said as long as 878 holds, it will be bullish, and we did get a big push up back above this downtrend, which is good. Want to see it continue to hold that and push towards that 200, up around 1159 if it can do it. Volume was decent, momentum swinging to bullish. We talked about that Friday session momentum, got that first step down, and we got the continuation on that, so that's good. And then you can see Marathon, massive day, 13.65%. Expected that move. Unfortunately, I wasn't watching this one closely. I should have had some alerts on it. We expected the break here. We got the break of this downtrend, 2 positive days. Expected this to swing towards that upper trend line. Price target still at 24.91 or 92, right in this zone. See how it plays over the next day or two, but this looks super bullish here on Marathon. I think that's where we're headed. Moving over to Breadth. Breadth cratered here today, 22% to the downside on the 20-day and 14.8 on the 50-day. Right back to the 40 level. 20-day getting close to that 36.6. Momentum continues to step down. Got into bearish momentum here on the 50-day. RSI breaking down. You can see this 20-day looked good. It looked like it was testing the zone, could potentially bounce, and now we've cut right through that. So see how this plays. Momentum definitely looking bearish on both of these breadth indicators going into tomorrow's session. Moving over to the dollar here on the hourly and the daily, you can see the dollar gap down, fell, tested the level, bounced from there. Now it's holding a slightly higher low on the short time frames. You can also see this consolidation low from Friday holding that zone. You can see the big wick on the day. Overall, still negative 0.03, but just barely negative. Momentum fading, RSI still above the SMA. I still think this is going to continue to swing slightly bullish. And I think that fits in with that breadth thesis that we saw in the previous chart. So dollar still slightly bullish, but it seems to be losing momentum on that daily chart. Moving over to yields, 2-year yield, very slightly positive, 4.76, hovering in the same zone we've been in, right at the 21 EMA. Momentum slightly bullish, but look at this 10-year, absolutely massive on Friday, absolutely massive again here on Monday. Momentum super bullish, above this downtrend line on a closing basis, which really wasn't a downtrend line, it was just a paste of this previous one on this most recent wick high, and now we are above that, headed towards the 4.55 area. That's concerning, so this would be a little bit of a bull flag setup. So you have a rally in, long consolidation. If this starts to break higher higher here. I think we're headed back towards that 5% area, which if that ends up happening, that's going to be quite bearish for markets in my opinion. And you can see it, rally, bull flag, starting to see that breakout potentially moving up here towards that previous high. So 10-year starting to make some moves and look bullish going into tomorrow's session. So see how this goes, continuing to watch this closely. Moving over to bonds, you can see these cratered here today, 0.66 and 2.04% for JNK and TLT respectively. Volume continues to come in on this move down. You can see we broke all these short-term levels on JNK, 200 sitting there at 93.15. And then looking at TLT, we've seen this before where you get a big move down, gap down, ends up buying back up to that upper trend line. See if we can find any structure there with this previous trend line. Not really. You can see we did wick that level here on this previous test. So touch the 55, touch that level. We'll extend this one out here too as well. So that was all in the same zone. Back down into this bigger downtrend, which is not great either. Go ahead and extend that one out. That was right in that zone. So now this looks a lot more bearish in my opinion. You can see this consistent downtrend. Thought we were breaking here. Talked about this potentially being a bear flag. So breakdown, bear flag, potential breakdown. If that's the case, TLT is going to be headed much lower, probably back towards that 86 area, which is the low from back here in October of 23. So something to watch. Momentum continues to roll to bearish, massive volume on that move. Doesn't mean it can't find support at the 89 area, but this breakdown has broken all of my theses for this move. So once this zone breaks, 86 is the next level. Moving over to volatility, obviously move index continues to rocket higher here. We've been seeing volatility gain on bonds, and now we're seeing that crater on the previous charts. So move index continuing to go higher. And then the VIX tried to go a little bit higher, got up into the 13s for a little bit, and then gave it all back. So really no structure here worth mentioning. Really just that bonds move, and the VIX not going with it yet. Moving over to my accounts, I managed to stay positive. You can see Russell was down 1.66. I was down 47, so managed to make money there. Still have a covered call at 201 for 82 cents, which isn't a slight profit. It was down a little bit after hours, but not much. And then looking at the Qs, back into my normal position once we got back above 477. Sold a call for today's session. Ended up having to roll that out to 482, $4.50 for tomorrow. And then I have puts for tomorrow as well at 480, and then 486 call. You can see that was a little bit of a loser. That's a 1% out of the money for a dollar credit. Still very bullish on my deltas there at 143. Honestly, a little bit more bullish than I probably should have been, but we'll see how this plays out. Pretty bullish on the Qs for a continuation day. And then IWM being cautious with just 20 deltas there. Let me know down in the comment section what you think of the weak economic data that continues to come in. How is that going to affect markets, and when are we going to get those cuts? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.